Preview.
I'll say I'm a first time buyer. I bought I have an audit done. I've got a $500 million acquisition that I've done that, basically makes my business a third bigger. What should I expect as a buyer?
Well, now you're on the opposite side, right? And so you still have to live with that seller as well, because likely they're rolling over equity. Maybe there's an earnout as well. And so you want to make sure that you are also having that same great relationship. Also, there's, as a buyer now, you have to live with whatever company you've bought. So if in your example, you've acquired a firm that has increased your operations by a third, that's substantial. There's so many operational, financial, people issues that to consider when buying a business as well. The integration efforts, I think, are often overlooked. Plus, if you're a buyer of a business yourself and rolling them in, there's likely you've accounted for potential synergies, meaning the ability to extract additional returns, or as you mentioned earlier, increasing your multiple upon an exit. And so the way to achieve that is to make sure you can, hit certain metrics. But without that plan, without the integration efforts, without measuring those synergies, it's going to be difficult to do that. So again, as a buyer, you're going to be also wedded to the seller going forward, but you're going to have not just the financial metrics to consider, you're going to have a whole host of operational and people issues to think about. So a great challenge, right? Great opportunity, because you can really extract a lot more value even on the upside, and you'll get the majority of it, but certainly quite the process to do so.
How do things change for me if I'm the CFO or the controller from a financial reporting standpoint? What do I need to do now that I've acquired this business, as I look at my financial statements?
It's a great question. So there are a whole host of financial reporting as well as tax issues to consider here. So we'll start with the financial reporting, or the accounting GAAP side. First is purchase accounting. So under financial standards ASC 805, you need to record the fair value of all assets acquired and liabilities assumed, and record certain entries related to that. And what does that mean? That means you'll likely need a valuation of everything acquired. That includes unrecorded intangible assets. So let's say you buy a business and it has a brand name, or it has some potential customers or a technology involved. You're gonna have to value those. Oftentimes hire a third party to do so, like you. Also, that earnout we talked about and that rollover equity, those also need to be fair valued as well. And then once you get the fair values, it's making those entries, those debits and credits involved, and that could also be a complicated matter. So you'll have to sort those out and write a memo for your auditors. On the tax side too, there's also a related purchase price allocation exercise under Internal Revenue Code 1060 that you need to fill out, and also likely fill out some tax disclosure forms for the seller as well. So, as a CFO or a controller, there's a lot of work to do. I mean, obviously transactions don't always happen. And if this is the first time going through it, then you may need some help.